Understanding the recent increase in the money supply. In recent months, there has been a significant shift in the money supply, with a reversal of the previous decline and a subsequent increase. This change has gone largely unnoticed by the general public, as a decline in the money supply is a rare occurrence in recent U.S. history. Over the next few minutes, we will explore the reasons behind this shift and its implications for inflation and the economy. The relationship between money supply and prices. Before delving into the reasons behind the change in the money supply, it is important to understand the relationship between the money supply and prices. Prices serve as indicators of the scarcity or abundance of goods and services relative to everything else. When there is a decrease in the money supply, prices tend to rise, reflecting the increased scarcity of goods. Conversely, an increase in the money supply can lead to inflation, as more money chases the same amount of goods. Historical context. Since the 1980s, the money supply in the U.S. has consistently increased, resulting in a rise in the cost of living. However, in April 2022, there was a historic decrease in the money supply, as the Federal Reserve attempted to reduce it for the first time in recent history. This decline continued until May 2023, after which the money supply remained relatively stable. During this period, inflation rates also remained consistent, indicating a balance between inflationary and deflationary forces. Factors influencing the money supply. Several factors contribute to changes in the money supply, including government borrowing, bank lending, and the actions of the Federal Reserve. The Federal Reserve's balance sheet, which reflects its monetary policy decisions, plays a crucial role in determining the money supply. When the balance sheet expands, the money supply increases, and vice versa. The reverse repo facility. Another factor influencing the money supply is the reverse repo facility, where excess cash is deposited by financial institutions. The decline in this facility since May 2023 has been attributed to the U.S. government offering higher interest rates on short-term debt, leading to a withdrawal of funds from the facility. This withdrawal has had a stabilizing effect on the money supply, counteracting the Federal Reserve's attempts to decrease it. Government borrowing and deficit spending. In recent months, the U.S. government's borrowing has decreased temporarily, resulting in a flatlining of the money supply. This decrease is due to the government spending roughly the same amount of money as it is receiving in taxes. Consequently, the amount of money in the government's checking account has remained relatively stable. However, this situation is expected to change soon, as the government plans to increase borrowing, leading to higher inflation rates. Bank lending. Bank lending is another significant factor influencing the money supply. As banks make loans, money is injected into circulation, increasing the money supply. After a slowdown in bank lending in 2023, it has recently started to increase again. This increase, coupled with the Federal Reserve's slower reduction of its balance sheet, has contributed to the recent growth in the money supply. Implications and future outlook. The recent increase in the money supply is likely to have implications for inflation and the economy. As government borrowing increases and interest rates rise, inflation rates are expected to climb. Additionally, unexpected consequences may arise from attempts to centrally plan the economy. It is crucial for individuals to seek financial education to protect themselves and potentially profit from these market conditions. Conclusion. The recent increase in the money supply has caught the attention of economists and investors. Understanding the factors behind this change, such as government borrowing, bank lending, and the actions of the Federal Reserve, is essential for comprehending its implications for inflation and the economy. By staying informed and seeking financial education, individuals can navigate these uncertain times and potentially benefit from market conditions.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.